All right, so this is Saturday, May 18th, and it's been a while since a video, but it's just been a very hectic past 2 weeks here in May. Now I'm going to go over basically all of May, just kind of skim through um, just the not as important stuff and get to the main ideas, which are really this week. But one thing I want to highlight is the beginning of May, I definitely had a slow start. It was a lot slower and a lot rougher than I expected. I mean, May is always usually tough for me, but this May especially, I really messed up my mindset to start because of MULN. There was a listed first screen day here on May 6th. Let's just go into on demand so we could see exactly what I'm talking about. So there was this listed first screen day here that I did not capitalize on. I was buying at 450 or 460, yes, 460, and selling at 476. And if we zoom in to a 1 day, you could see I got a perfect entry here, 460, and I was selling here thinking the breakout was weak. And this really led me down a path of saying, what am I doing wrong in my trading? How am I not able to hold on for these bigger picture moves? And I started trying to reinvent the wheel when nothing was really broken. It was just my trading wasn't broken. It was my mentality and my mindset was broken. I just have to stick to my risk. I mean, I'm risking 20 cents and this thing ends up running a dollar plus, $2 almost. And really the bad part about this is what happened the next few days. So I did make money on that. I mean, I made 400 bucks, but imagine if I held. And that right there, what I just said was the problem. Because I went into the next day with a very bad mindset. After I don't capture, not maximum profits, but a good chunk of a move, I start to think that I'm owed. I say to myself, oh, I should have done this, could have done this, would have done this, I should be up this much. And once I start thinking in terms of shoulda, woulda, coulda, and being up in dollar terms versus reality, I get myself into trouble because I'm looking to make back that money that I feel owed when, the market doesn't owe me shit. So I got myself in a really bad funk where I started shorting MULN on the 6th, lost a grand. The next day, BENF, let's see what I did. BENF on the 7th. So on demand here, we're on the 7th. Let's go to the 8th. Yes, BENF was trying to was trying to play the listed first screen day, but it just wasn't happening, and that's because, like I said, there was a big offering, big ass offering, ready to go before the run. So they were just diluting the whole time. And when there's a big, big offering, just leave it alone. Wait for that gap up day and volume to turn. I was fighting it. I was trying to make back that MULM money. I felt owed. I was pushing it. I was fighting it. I wasn't doing the things I was supposed to. I wasn't following my process. I wasn't following my discipline. I was just trying to make money. And when you try and make money in trading, you will always lose. When you play your patterns, stick to your process, and stay disciplined, you'll always win. Well, not always win, but you'll win in the long run. And then on the 8th, it was just a big scalp day. The 9th, let's see. This was really DJT and Carvana, my swing trades, that made me money on the 9th. Oh, wait, we're still on demand. Whoops. On the 9th here, I bought this breakout, sold it into the next day when it was going red. Carvana, bought it this day. I just sold all out by the Actually, I sold this way too early. I was buying at 114, selling in the 116s, and it went to 120. I should have theoretically held for 3 days, but I don't know. I don't like holding stock so long when markets are at all-time highs. I know that might sound counterintuitive, but when markets are running so strong for so long, I would rather wait for the dip, like down here. But that's besides the point. Back to the video, yeah, a few scalps still fighting with BENF. CTMX was fighting. RNAS, big miss again this week. RNAS or last week. Completely missed that listed first. Oh my goodness, completely missed the listed first screen day. And I mean, now look at it. I'm going to throw that back just over here to check out for tomorrow when I make a scan, because that's a impressive bounce right there. Not great volume, but it's cool to look at. Let's see. Oh yeah, and then so I got some good momentum going. I said, okay, I'm down, but now I'm slowly coming back. And then Friday comes. What ticker was this on Friday with the day one short? Shit, did I not write it down? Uh, day one short. It wasn't, no, not FFIE. I'm not short in FFIE. Uh, I definitely have it written down somewhere right here. Oh, I think it was LIDR. Yeah, it was LIDR on 510. So let's go on demand, look at it on 510. Let me go to the 13th so the full day's loaded. So it was a day one runner. And normally I don't play day ones. And I decided to play a day one. And worse than just deciding to play a day one, I shorted a day one. But I did go long as well. So I'm going to go back to that mindset of I feel owed. And I'm going to tell you why I had such a bad trade on this. And I have to get rid of that I feel owed mindset. I'm actually going to write that down right now. I'm going to write stop feeling owed. Get rid of that mindset. But that being said, let me get into it here. So it gapped up on really big volume. It was a former runner, this and that, blah, blah, blah. I was actually buying it in the morning, and I normally never buy first green days. Yeah, day ones, as I call them on listed names. But, nothing was working in my trading. I was trying to find something that was clicking and, it was working, but I did the same thing I did with MULN. It was working, working, working. And then I was selling here before my low of day risk was breached. And then you look back later, I mean, I probably would have been selling, let's see, I probably would have been selling all over here, all out right here. But you look later and I'm looking at this. I was looking at it here and I'm going, damn, I missed out on so many profits. I like 5,000 shares in the morning, this and that. So I started to feel owed. I was right, but I didn't take my profits. And it's so dangerous because that's my terrible habit pattern. Thank God it's not completely destructive, but it definitely hurt me a lot to start May. And I'm seeing LIDR up here and I'm going, what are the odds we really break out through the highs? We're probably just going to, do a stuff move, hard pull, and close below 2. So I started shorting in here, added a little right here using that high of day risk, and whoops, alt up, I get stuck, and I think I was up like a grand on the day. I get stuck in the halt, end up, covering basically dead top, and I lose like 5 grand, and my week goes from basically break even to a 5 grand loss. And I'm just, beating up on myself. Why did I do that? It's not my pattern, which now I know I'm never shorting day ones ever again. They're just not worth my time, not worth my energy. I'll let the system shorts do their thing when they play those in the morning on the gappers, whatever they want to do, but it's just not for me. It doesn't fit with my personality, number one. It doesn't fit with my trading style. It doesn't fit with my goals as a trader. If anything, I want to transition more towards swing trading as time goes on. And that's something you can't really do with a day one because you don't know what's necessarily coming next. There's not enough information on that daily chart yet. But that was that. And I closed the first week down 5 grand. And I was just very disappointed in myself, not because of losing money per se. Doesn't matter if I was down 5, 10, 2, 1 gram break even, but breaking my rules, not following my patterns, not sticking to my process and discipline. That is what gets me so angry more than anything. And then on the 13th, I came in, I was just doing a bunch of stuff on Monday and had a $2,500 loss. And after that, I'm down 7,500 on the month, and I'm going, I feel lost, nothing's working in my trading, so I was going back to the basic process. Just focus on multi-day runners, focus on framework patterns, this and that. And then all of a sudden, GME, AMC, and all that came around. And the next day on the 14th, I locked in 5 grand. I think I was scalping FFIE. But then after that, the rest of the week, 15th, 16th, 17th, was the best trading days of my life. As you could see here, the 15th locked in almost 20 grand on FFIE, SLNA, SINT, GME. 16th, 10 grand. And the 17th, I was up close to 20 grand and gave back half and then said, you know what, it's time to call it a day, call it a week. Let's not get sloppy now. But I'm going to go over all this. And really, I made really all of that money on FFIE alone. I mean, GME and AMC, I've been playing for the dip buy bounces, and they've just been duds. I've been losing on those. Um, I'll go over those after, but FFIE has really been the main play. And it was just a massive runner. I mean, one of the best I've ever seen with massive volume and liquidity. And if we go into this day here, I was shorting. I was shorting into the spikes in the high of day because I realized one thing. I realized shorting the gap ups that straight fade out of the open, even though over the long run they'll work, like if we look at GME, shorting the gap ups like this that just fade work. I don't like shorting them. I want strength and blowouts out of the open because I think it conditions your mind to get in a bad spot for plays like FFIE, where, this day was a weak open, you're shorting it. This day was a weak open, you're shorting it. This day was a weak open, you're shorting it getting blown out. That's where I want to be shorting it once everyone's blown out. I was shorting it at 350 was my entry, which was phenomenal after a few losses, but back to the point, I think the weak opens kind of make condition your mind for these potential huge losses on FFIE. So me missing GME in those if they don't gap up and squeeze more, it is what it is. I'll hit them on the backside on the next day. And I noticed the next day pre-market they work, but I'm really going off on a tangent there. But yeah, so FFIE, I was shorting it into the high a day. I was covering into the VWAP dips. And then it just, right here, it's just trading so much volume. A sub penny name or a sub dollar name is always dangerous to short. And I knew how many people were probably sized up. And here was the psychological factor that made me think this one could be a little different. Not go to, almost 4. But for me, I was thinking, maybe it does go to 1. Because number one, you have to remember GME and AMC ran earlier in the week. Traders made a lot of money. When traders make a lot of money, they start gambling with house money. They're going, oh, I'll increase my risk, increase my size, this and that. They kind of throw caution to the wind and oversize with house money because in, their minds, they're not theoretically losing anything. So I just thought everyone was probably oversized and overconfident. Egos were inflated and wallets were inflated. And when those two things occur, that's a recipe for disaster. So it held up. I started buying the high day breaks. Volume came in, it was holding. Kept spiking, kept spiking, kept spiking. And I was just playing dips, all dips. I was dip buying for scalps. And here's the interesting thing. They closed it below 75 cents. And I saw a post from Nate on Twitter talking about the halt bands for the next day. And if a ticker closes below 75 cents, the halt bands, the limit up, limit down halts, are much tighter, which could lead to further squeezing of shorts, bigger spiking than you expect. And I didn't realize this until the next day. This day here was over. But you take now that those shorts mentality of, it was just a loss, whatever, I'll get it tomorrow. It's even better. I'm going to double down. I still have house money. I'm still going to fight, I'm still not going to be patient, wait for the backside. That's a double recipe for disaster now because now everyone's going bigger size tomorrow. They think it was just a fluke. And that little nuance of that halt band being tighter and it also still being under $1 was, in my opinion, a big problem. And even though I kind of felt that way, I still got killed on the short this morning. I was shorting it at 82, covered over the high a day, had the huge dip, missed the panic here because I thought it was going to halt down. I like to scalp the panics. Reshorted it here, got blown out again through the highs, reshorted it at 121, and then when it was holding VWAP again, I started noticing a trend. When FFIE's dips are bought up and we hold VWAP, that's a very bad sign. So dips bought up super strong. Look at the wicks. Wicks bought right up. Crack bought right up. Crack bought right up. So I had a 218 average. I covered a 118 average. I covered at 120. Spiked through the highs. I said, shit, looks the same as yesterday. I'm a buyer. I bought it in the 130s. Yeah, 130s I bought on the dips because the dips were getting bought up. Broke out. I sold into the 170 push. And then those halt bands triggered. We went full parabolic. I nailed a 5,000 share short at 226. Had the halt down, covered a piece, and went long in my E-Trade account just to hedge a little and scalp the dips. Sold into the spike. And then I was just patient because I thought, maybe this is the day we crack. And we did. We crack. Covered some more of my short. Dip bought some more. Bounced up. Sold my long. Held my core short. But then notice, what did we do? We did this. It's just a bigger time frame, bigger range of what we did in the morning. We cracked, held VWAP, and spiked. Look, we cracked, held VWAP, and spiked. So at this point, I'm thinking if we don't crack into the close, anyone who's short in here, if this starts uptrending after hours, we get a huge blowout tomorrow. Now, I thought, honestly, I think it was right here. Whoops, right here after hours, I was like, it's probably not going to happen. I was fully thinking, it's not going to happen. It's probably going to gap down at the open. We're just going to, flush fade out of the first red day. But I always like to say when things get crazy, they tend to get crazier. And then when people think it can't get much crazier, it gets crazier. And you get to this apex of craziness where no one thinks it could get crazier. And then it just goes a little more than everyone thinks. So I knew where we were at this point, and I actually created, I called it my Blue Moon short rules, where we get to a certain point in a chart like this. Sorry, I'm trying to find them in my papers, but I have them off the top of my head. I could kind of remember them. So when we get into a chart like this, there's 3 key things I notice. Let me highlight them real quick before we go into this next day. Number 1, you have to notice where the price action is versus the morning lows. And number 2, you have to notice when price action is holding VWAP and staying strong. I mean, really, those 2 key components, morning lows and holding VWAP. So I said that's the trend. We hold the morning lows, hold VWAP, squeeze over the previous day highs. So I was waiting for a trend change. And to stay safe, my Blue Moon short rules were start small, start 1/4 size. And I kept telling myself, you're not going to miss it. You're not going to miss the trade. You're not going to miss it. And let me just go into the 1 minute. So pre-market, we're trading all around. I'm still scalping dips. I was scalping everything. Scalping dips, buying dips, shorting the pops. But I didn't want to take a full position till the open. And I said I'm going to look for 2 things. I'm going to look for, well, really 3 things. I wanted to look for the morning lows to crack, VWAP to fail, and ideally a blowout. Blowout shorts, fail VWAP, and that's that. So we had the morning panic. I dip bought pretty large and locked in a good, I think it was like 5K in the morning right there, because the halt bands were wider, so I knew it wasn't really going to halt down. And with this just crazy volume it was trading, it's probably going to, bounce before we just head straight down. If we go even lower, even better of a dip buy, so I didn't mind. We broke out. And right here we cracked hard, and I'm thinking, okay, that was probably the blowout. blew out all the shorts. We're now cracking. This is probably the short. We roll over, crack VWAP, fade and fall apart. So I was shorting all in here in the 280s, 20-cent risk up to $3, great risk reward. It was going sideways, sideways. I added, I think, in here, and we're holding, but we're kind of flirting with VWAP now. The other day we were bouncing and strongly above it. Today we're dipping below, above, below, above. So I'm thinking, one of these swipes we're going to get a rug pull, and that's probably going to be the end of it. But it kind of got stronger, and then I started thinking to myself right around here. Let's just highlight it again. I said, ooh, morning lows are 220, holding VWAP. I was starting to say I would rather cover this and be reshorting when we hold below 260, below VWAP for higher odds. So I did end up covering into the high of day, into the 3 push. We had a slam, but I stuck to that rule. I actually drew a line at 260, and I said I am not shorting until price action gets below 260 because that's the key level for me. We go on. I started buying dips again because it looked like the same thing as the other day. I thought we were going to halt up, and we just kept spiking, kept spiking, kept spiking. And right in here, I thought that was the end here. I shorted here, quick cover. And where was it? So I moved this line up actually because 220 was my new level. I said, okay, below 320 now, and I'll start shorting. And then we started to get into 12 o'clock, and I don't know, it just seemed a little heavier than normal in here. So I took a starter at 355 right into this chop, and then I just added, I think I don't know, 5,000 shares or something. And then this hard crack was kind of the signal to me, okay, that's the hard crack, big volume, VWAP crack, crack in the 220s, 320s. If we hold below 320s now, this could be it. So we hold below 320s. My biggest mistake was not adding, maybe when we crack 3 again into the push. But, after losing so much, I was just so reluctant, so worried. But it is what it is. And we crack, we're failing, we're fading. I covered all of my short here, flipped long. I thought we were going to get a bounce up to the 260s, 280s to reshort. We ended up failing, which took a big piece of my day back because I really sized up on the dip buy. And I was trying to re-get back in because I thought, it's going to stop me out, going to go higher, but it didn't. Then I re-added short in here because I just said we're not going to bounce. I'll use 2 as risk. If we get back above that, we'll probably spike. And we just faded off. And then I really messed up trying to dip buy way too big. Gave back a lot of my day, but like I said, I was up almost 20 grand, gave back like half of my day, which at that point it was just end of a good week. I was trying to be a gunslinger. The pattern and process kind of went out the window. I was just going for it, which is okay. It made me better at being comfortable with larger size and larger losses. But at a certain point, I said, all right, time to rein it in, close up shop for the day, get back to process, get back to systems, get back to the basics. And that's what I did. I didn't touch it again. Now here we are, faded down to 72 cents after hours. I'm going to start looking for a dip buy on this in the next few days. Potential second red day short as well because we are up from 4 cents. This will go back down there within the next few, weeks, months. But I think, if we're gapping on Monday, ideally, we could maybe have another red day, another fade because we are up a ton. Remember, people were shorting massive size this day, this morning, expecting it to come back down. So we have lots of room to come down. It's still an A plus setup. Just be more conscious with size and start small. No reason to start big. You're not going to miss it. You're not going to miss it. So that being said, that was the majority of my profits. And then other than that, I just want to go into the mindset of GME. This one, people have been trying to dip buy now for 1-2 days, and it's just not working. And I always, history doesn't repeat, but it rhymes. If we go back to here, the GME spike, remember this faded for 1, 2, 3, 4, 5 days. People were trying to dip buy it here, 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 and then it bounced. And the bounce still wasn't that good. It took a few weeks to work everyone out, and that true bounce came. So, looking at the current chart, we might have some time. It might have to work people out for a while and then work in a few days, few weeks. Now, that's not to say I can't just gap up and work Monday, where I am going to be playing it every day, but I'm going to be very conscious. Remember, when everyone's looking to do the same thing, usually the opposite occurs. When I get messages from people on Twitter and someone was like, "Oh yeah, the GME, GME looks good for a dip buy right there." I go, I'm going to be safe. I don't like when people are talking about doing what I'm in. I like when they're talking about it, get shaken out, get stopped out, and then I get back in. So remember one thing about these. They're not going to work in the time frame in your mind. Everyone could see the patterns in their mind, but the time frame it's going to play out is going to be a lot different because everyone's going to be trying to do the same thing until they're not. Perfect example, FFIE. Everyone was trying to do the same thing, short, 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 until they weren't. Right here, this is where all the question came in. All the, oh, is this really going to work? I'm not going to short anymore. I'm going to wait. And then when all the shorts got worked out, that's when the collapse comes. Wait for everyone to get worked out. Be super patient. But that being said, I'm very fortunate of how everything went, how my worst month has now turned into my best month, how all my years of study and all the hard work and trading, really, I saw the fruits of my labor this week kind of come together, but it's still just the beginning. It's just another day for me. Always have to stay humble and remember profits are really at the end of the day meaningless. It's all about process. It's all about patterns. It's all about discipline. So that being said, the one new thing I'm implementing coming into the start of next week, every morning I look at a 0-0 scoreboard. I don't want arrogance influencing my trading. I want to stay humble because I saw how arrogant, overinflated ego, overinflated wallets last week ended up losing a lot of their money shorting. And I just want to learn from their mistakes. I feel for them. I hope, everyone who lost a lot comes up with a better process and recovers well, as I'm sure most will. It will just take time. But I'm going to learn from their mistakes so I never have to experience the magnitude of what they had to experience. I will have my loss, I will have my terrible days, I will have my gruesome days, but if I could limit them to a manageable, threshold, that's my goal. And I just understand that by staying humble, staying disciplined, sticking to your process, and sticking to the patterns, that is how I stay safe. So coming into Monday, the score is 0-0, and I'm just going to take it one day at a time.